Recording in progress.
What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor, so please trade at your own risk. Now, first, I do want to start off by saying thank you guys for subscribing to the channel. We got 72, almost to 100. That's really cool. That's awesome. Never thought that that would happen for this channel. I was actually just, uploading to this channel for my own back test reasons. And, the fact that you guys are learning something, that's really cool. Again, I am not an educator. If you'd like some education, go check out ICT's channel. Now, to begin, I do want to go over how I'm doing on the FTMO challenge. I'm not going to lie, y'all. I am getting wrecked. I've taken 7 losses, 2 break evens, and only 2 wins. You can see that I'm down 5% on the account. Currently, I'm only risking, I went from 2% risk to 1% risk. I lost that, so I had to cut to 0.5% risk. I had a little win, so I was able to up it back to 1%, and then I lost that. So now I'm back to 0.25% that I'm risking per trade now. With these setups, I'm not gonna lie, y'all. My direction's right. It's really just I'm trading the wrong time frame. I need to get off the 1 minute time frame. I really like the 1 minute time frame because you could get some huge risk to reward ratios, but I really dislike the 1 minute time frame simply because it is noisy and it will stop you out a lot. I literally took 3 losses off the 1 minute and literally the 5 minute took off. And it bugs because you could see here to kind of go over what was going on for the day. If I just kind of I'll actually just delete everything so you guys can see. So starting from the daily, if we apply our daily bias document that we have, if you don't understand how to do it, go check out the recent videos where I explained how to approach the market using the daily bias. You can see here that price actually shifted market structure right here with these highs. This is a market structure shift right here, and this is a current reversal leg. So this leg right here is a reversal, and it's a bullish reversal. So currently my bias is bullish. Okay, that's my bias for this specific day right here was bias. We traded this candle. The new day has already opened about an hour and a half ago, but for New York session this morning, 3/13 Monday, we were trading this candle and our bias was bullish. Okay, so we dropped down into the 15-minute and let's just go. And you know what? I really dislike that I actually deleted everything. Let me just bring it back on. Okay, so we dropped down to the 15-minute because it was just a lot of annotations on it, so you could see here. On the 15-minute, I annotated the Asian range. This was the high and this was the low of the Asian range. And then the London kill zone, what did the London kill zone do? It kind of consolidated and then it sold off. Now, whenever the New York kill zone had to open, I have it right here. At the start of 7, the New York kill zone, we were trading in the middle of the daily candles range because this was the daily candles low and this right here was the daily candles high. So we were like way down here. And if I'm bullish, this is beautiful. You know what I mean? Like I want to be down here in the middle of the day candles range where it has like a huge wick up here that needs to continue to be filled for the remainder of the day, right? So I had my bias correct. I was bullish. And right here, you can see that there was this 15-minute low right here, but you can also see it from the 1 hour, right? This was technically like a 1 hour swing low. The Asian ranges low was technically a 1 hour swing low right here. Liquidity that got ran out. Now, this was my issue. This was where I was going wrong. Since it was a 1 hour swing low, I was supposed to be taking my entry off the 5-minute, right? And that entry actually would have came right here because once it got ran, which it ran out right here, this was outside of New York, so we got to wait till we get over here. Once it got ran right here. This was a market structure shifting point. It shifted with this little wick, but there was no fair value gap, so there was no entry. Then it took out this liquidity right here. Once it took that out, there was some market structure shifts bullish. Gosh, I want to take that off so you guys can. There was some market structure shifts bullish where it shifted right here with this wick off of this candle's wick. shifted bullish, but there was no fair value gaps. So there's no valid opportunity here. And then it took out more liquidity right here. It took out this liquidity with this leg. From this point, this is the valid market structure shift swing as soon as this candle closes. So once this swing becomes valid after this candle closes, then we're looking at that one for the market structure shift. And you can see that this candle right here is the one that shifted structure. Once it shifts structure, we wait for the candle after to close. And once it closes, we'll look for the fair value gap in between there. And you can see that the fair value gap was right here. And this was your entry candle right here. Came in at 8:40 a.m. Tapped into that fair value gap, and you can see how it took off from there. We would put our stop loss right below the one candle. So it would have been a 19 pip stop loss. And you could see that it targeted the day's high, which would have been a 1 to 3R. Now, why did I lose this? Because I was on the 1 minute and I was trading over here. Look at this. Right here, you can see that once we ran out liquidity and we came into our area, this is where my first entry came. I seen the market structure shift from right here. This was my market structure shift on the 1 minute. It shifted structure right here. This was a fair value gap. You can see it tapped into it, responded from there. And then I didn't enter it anywhere in here. But once price opened, my thought was, man, this is about to start taking off already as soon as New York opens. And so I seen this 3 candle order block right here. This is a bullish order block, 3 consecutive candles right here. This was the order block that I took entry off of. As soon as because once price opened, we were in there, and then it took off. And that's actually where I believe that I took my entry at. I don't think I took it right here. But you can see that I took it around here and I put my stop loss below the order block and I actually got stopped out. So that was my first loss. So I was like, okay, bummer. That sucks. But here was my second one. Right here, you can see that we actually shifted structure bullish right here off of these wicks. Shifted structure with this candle, and then we created the fair value gap right here, right? So once we created that, it continued expanding and it created a second one. So like, okay, well, I'm going to take my entry based off the first point of entry, the first point right here, because it would suck if it would tap it and then take off. But I was trying to enter down here. So we enter off of this one and we consider the other one. So we give price room to run into that, you know what I mean? And you can see that this one right here, this was my invalidation candle, which was this candle right here. If price came below this wick right here, which the low, if you see here, the low of this candle is 1.06599. And you can see that this candle came in, the low of this one was 1.06601. So this candle took us out right there. So I manually closed here because that invalidates this setup for me, those fair value gaps for me. So I closed there manually because I didn't see the opportunity holding. And so that was this close right here where I closed out about 0.20% in loss. It didn't fully hit my 0.25%. You can see down here is the full 0.25%, but I closed as soon as this candle took it out. And then from there, I took another entry. Where did this entry come in at? Let me review my MetaTrader really quick so I can just kind of be a little more spot on. This entry came in at 1434 at 34, which was right here. No, that can't be right. Is that right? At 34? I think so. I think I took entry there. Why did I take entry right there? I don't think it's right there because there was no market structure shift. Oh, wait, yes. Okay, so the reason why I took entry there was because this candle took us out right here, and then it shifted up again right here, okay? So it shifted back up, and it took out this candle's high right here. This was a market structure shift right here, and you can see the fair value gap right here. This is a fair value gap, and this is a fair value gap. So I took entry right here off of this fair value gap. Stop loss went below that candle, and you can see immediately got taken out. So after those 3 losses, I had to call it a day. I had to. It sucked. It was a bummer, but I was kind of stuck in consolidation, but I was also trading on the wrong time frame. The level that it ran was too high, so the entry should have came off the 5-minute time frame. And you can see that's exactly what happened. Price didn't give any opportunities to enter off the 5-minute until it shifted structure right here and gave this fair value gap. Then right there, you can see this candle right here wicked into it. Boom, once it wicked into it, you're a buyer right there. And that's your entry for the day. But those were my mistakes. I'm still making this account go. I'm 15% is a long way to go, but I believe I can fucking do it. I've seen professional athletes, professional teams come back from losing by so many points. You know what I mean? Professional football teams, professional basketball teams. I've seen teams come back in just spectacular fashion, just badass. If you're a professional, you can do stuff like that. I believe I'm a professional trader. I don't have the funded account yet. I plan on having it, but I believe in my mind I am a professional trader. I understand how to manage risk. I understand how the market moves. I understand what I'm looking for every time I go into the market. Okay? I understand my mistakes whenever I make them. I learn from where I went wrong constantly. Okay? And I perfecting my craft. So I do believe that I can make 15%. There's still this week, which is Tuesday, Wednesday, Thursday, Friday, and then 2 more weeks after that to try to make this up, try to get back to break even and in profit so we can at least get an extra 14 days with FTMO so we could try to get this challenge funded. But I did want to just come and kind of share my morning this morning, kind of share how this FTMO challenge is going. I'm being fully transparent. I'm not gonna lie, y'all. I'm getting my ass kicked, but I am not getting discouraged. I'm not tripping about it because ICT says get over the concern about being right every time. Put aside the idea of perfection because you're not gonna have it perfect. You're not gonna get in perfectly, get out perfectly. You're not gonna have the perfect risk, the perfect asset, etc. You will always find reasons to be wrong. You want to embrace imperfection, embrace the idea that you don't have to know everything. You don't have to be right. Being right is not equivalent to being profitable, and that's important. I'm going to close the video on that. Thank you guys for watching. Until next time, hot shot out.